Hey, good morning. Welcome everybody to ShortSalePowerHour.com. I'm Kevin Kaufman. It's Fred Weaver. We're Group 4610.
I'm busy.
And for some reason, you tuned back into Short Sale Power Hour.
Well, it's a good thing you did because we have not been traveling for the last couple of weeks. We've been home in our office getting stuff done. And what that means is that these videos are even better because
we get a chance to get on the phone.
They come from stories of actually us negotiating short sales. So I think you wanted to share a recent story you've been working on.
Yeah, so our lead negotiator, our short sale manager, Brett, has been working on a file where there's mortgage insurance.
Yep.
There's a first lender, excuse me, a second lender, and the second lender's got a HELOC, so there's some deficiency rights there. And then the first lender, first investor, has a mortgage insurance policy.
Okay.
And essentially what was going on is the second lender wanted 10% of their balance to release their lien. That's pretty standard.
Release the lien or settle it in full?
Release the lien.
Wow, okay.
Literally turned down.
Greed is pretty standard, is that what you just said?
Greed is standard. We are talking about the banking industry.
Thank you.
We literally escalated to the CEO, of the company, 10% to release the lien. They understand their deficiency rights in Arizona.
Okay. Are you going to name this company?
No.
Okay.
So,
I don't know what it is.
Here's the problem we were running into. The first lender only wanted to give them 3%.
Okay.
We got them up to. So what we found out was that it wasn't them that had the problem. It's their mortgage insurance company that would only allow it. So we got an exception up to 6%.
Okay.
And it still didn't work. I mean, 10%, 6%. That's still way off. It's a significant difference here.
Yep.
So
it's 4% if my math's correct.
Literally, we had to spend some time here at the MI company working on their guidelines and policies, and it got to the point that I got on the phone yesterday with a gentleman at MGIC. His name's Lewis. Lewis is a pretty high up guy there at MGIC. And we had a conversation about this particular deal and how stupid their guidelines are. And it was funny because what he wanted to do is he wanted to complain to me about how he has to pay out a max payout on a mortgage insurance policy where he's never received a premium. And I thought, well, Lewis, I actually said this to him, are you punishing me because you guys made a bad business decision? Dude, you're in the insurance industry. What did you expect? People don't pay bills. That's why there's mortgage insurance to begin with. You guys just made a bad call. Don't cost yourself more money because this particular seller is actually agreeing to a promissory note, a small promissory note.
With the MI company.
Yeah.
So the MI company, actually, there's a benefit to them over short sale, no matter what the payout for the second is. Yeah. Short sale over foreclosure because there's a small note going
and now he knew that. He actually led off the conversation going, I understand, I don't have the right to pursue. So I just walked him back through, okay, the home forecloses, you get nothing, you have no deficiency rights, they don't give you the couple $1,000s they're saying they're going to give you. All you have to do is give an extra 4% to the second lender, which in this case was only a couple grand. So, I mean, for me it was dumbfounding that we were even having the conversation.
Correct me if I'm wrong, his payout was already maxed, so the 4 versus 10% doesn't really matter, is that right?
Well, he essentially, actually no, he was saying that it literally did affect it by a little bit. But the point was, is he was still going to lose 12 grand.
Yes.
Which is what the sellers committed to pay them back over time.
Got it.
So, I mean, it was kind of funny that we had to push and push for a couple weeks, and it took going to this high of a level. But essentially, I just pushed him on it, and I stood firm. And what do you think he did?
He caved and gave in.
He caved and said, okay, I'm going to do this deal. I understand. And
he probably said, but this is an exception. I'm not.
No, you know, he didn't even do that. He didn't even go down that road. But this is a guy that's helped me in the past.
Okay.
You might remember him from some other.
I do.
From some other things. But he actually said, he's like, I get it. All right, I understand this is our only play other than foreclosure. Let's do this. But I found it to be dumbfounding and mind-boggling that I had to go that high. That Brett had to spend that much energy getting them to go past a guideline. Here was my point and the story that I wanted to make sure Brett and our other negotiator, Esteban, knew about this. Is like, hey, when you go into mortgage insurance companies, just because they're demanding something, even when they're demanding at level after level after level, manager and supervisor and VP, doesn't mean that you can't get what you want. You have to go in firm. You have to go in knowing the bottom line. You're like, you got to know your stuff. I was there. I let him know I was the professional, and he did not know more than me. Yep. And I was going to help him save money because he just didn't see the whole picture. And he caved. And I think that you can get that more often than you have to lose in the MI battles. And I know, unfortunately, a lot of agents are losing that battle way too often for their homeowners, and I think it's a disservice. So we just wanted to share this today as a reminder, guys. Go battle the MI companies. You can take them down. You're the expert. They're no different than an investor. You just have to go show it to them.
Yep.
That's it.
And if you want to know more about how to beat an MI company, you need to be at Short Sales Gone Wild, because we actually show video footage of us overcoming a battle with an MI company. I know you hear us say it, but you don't connect to it until you get to see it. And so that is one reason you should be at our class on November 3rd in Vegas, is to watch the video of Kevin overcoming a mortgage insurance contribution. And if you're not going to be able to make it to Vegas, then
just
come bring us to your area or buy Short Sales Gone Wild audio video pack, which will be available here within the next week or so.
The next few days, yeah.
Yep.
Cool. Well, let's wrap it up.
1, 2, 3. Short Sale Power Hour! Short Sale Power Hour! Crush it!
It's crushed.
Crushed.